Welcome to the Value Builder Podcast, where we focus on real estate with a value add mindset. Real strategies, real operators, real outcomes. Let's dive in.
All right, welcome everyone. Welcome to Value Builder Podcast. Today I have a treat for you guys. I have my good friend Jaime Contreras with us on the pod. I learned a lot from this guy. He is a master of financing negotiation, and especially with seller financing. He is really excelling into building relationships, and I really would like to dive into that. But before we start, Jaime, let's introduce yourself to our viewers and listeners who haven't heard from you. So tell us, what do you do, where are you from, and how come you in commercial real estate?
Absolutely. Thanks so much for the invite here, Saul. Um, Jaime Contreras, as you said, I'm originally from Colombia. I moved to the US back in 2003, pursuing a dream, I guess, an entrepreneurial dream, and did a lot of going around in circles, always around real estate, always doing things regarding real estate, including tech real estate. I had a tech startup in the short-term rental world, did some hospitality with Starwood Hotels and Marriott International, and then finally started doing some residential investment and development in the mid 2010s, I guess. And then more recently, in the last 3 to 4 years, amongst my alongside with my partner, we founded Good Harbor Commercial Real Estate, which is what we do today. And the focus of Good Harbor, as you know, so is primarily industrial and retail
Yeah.
buildings. That's all we do. We used to do hospitality. We used to do residential. We no longer do any of that. We're primarily focused on retail and industrial.
Makes sense. Makes sense. Yeah. So you came in 2003. I came 2001 United States. So we came almost the same time. That's amazing. Awesome. All right.
Yeah.
So, Jaime, you've built reputation on creative deal structures and seller financing, in my opinion. But before we dive into tactics, tell us one you mentioned about was that 3, 4 years ago, but what was the pivotal point you decided to go in commercial real estate from hospitality, which is hospitality is part of commercial real estate, but going from that sector to industrial and retail. Do you remember the moment? Why was that?
Absolutely. So really, the pandemic was the pivotal point because we were seeing on quite a bit of hospitality assets when the pandemic hit. Luckily, we were very disciplined about reserves, and we made it through without losing money during that time. But it was not easy. It was not easy. There was as you know, and there was the downside for hospitality was deep and not super long, but deep enough that it took definitely a good number of players out. So we just between that and realizing how operationally intensive hospitality can be, especially when you don't have humongous scale, we were just looking for something else. We were looking for something that would be easier to scale, that would not be as operational intensive, that would not require as many boots on the ground, honestly, because like we also struggled quite a bit with talent during the pandemic and after the pandemic. So we were just in the search for something that would allow us to scale more rapidly without having to build a humongous team and without the hassles of hospitality. Hospitality has its huge pros, but it definitely scale is so important in hospitality. And before you reach scale, it's just really hard to not be in that grind of like trying to survive. So at that point was when we actually for a second went back to residential during the pandemic and did some investments in residential. But then at that point is when we really came across the opportunity of retail and industrial and loved it from
Uh-huh.
the first time we were sitting together looking at opportunities like that. We decided to shut down our residential investments at that point and just move on and start our Good Harbor to be, make Good Harbor focus only on retail and industrial.
So at the peak, how many, I think you measure that by keys, right? How many keys or how many doors you were managing or operating before you switched it before the peak?
Well, it was never like a large operation we were doing. I'll tell you what we were doing. We started with Airbnbs, regular, short-term rentals, and then we started repositioning big mansions into boutique hotels, basically. So 16 rooms, 10 rooms, things like that. So at the peak, we had, I guess, between our properties and the ones we managed, we had close to 100, 120 doors. Right now, we are unscheduled to close our last sale July 2nd,
Nice.
and the last quad that we have, and that will be the end of our hospitality, at least for now. I love hospitality, but if I ever go back to it, it'll be in a very different setting.
That's amazing. Awesome. All right. So let's dive in right now in that topic I want to explore. So you've mentioned in the past that you approach every seller like it could be a lifelong business partner. So what does it actually look like for you? Let's say from the first phone call to after closing. How does that look like for you when you approach the seller and you think that he can be a lifelong partner?
Yeah, so I think I gotta say that this probably also came from our time doing residential investments back in the mid 2010s and all that, because we really kind of like learned the ropes while talking to residential owners, right, in the living rooms and trying to really understand what I guess how to address their needs, right? So, because that's really where it starts, right? Like for us, it starts like we need to find a way to add value even beyond price. We need to find a way to truly solve their problem or their need, right? And if we strongly believe that if we actually understand that, we will find a way to make it work. If we understand what truly is that they're looking for, which, believe it or not, we find is that most often it's not price. It's not really about price. It's other things that are even more important than price. So to answer your question, so one of the key things we do actually at the very beginning, almost to a fault, because we've some brokers do not like this, is that we literally say to brokers, if we're not in front of the seller, we say to brokers that the way we work is by establishing a relationship with the owner. And we ask for an in-person meeting with the owner. And we are very, very persistent about it. Like I said, almost to a
So
fault.
quick question
And so
here. If I may just so do you insist that with every single deal you negotiate, or the ones you think are gonna go to seller financing?
almost every single deal, with the exception of institutional, right? So if we know it's a REIT, if we know it's someone who's not the other end of the conversation is not going to be a true owner, then we don't insist with those. But every other one every other one we actually do, even if we know that, even if it's not looking that good, because we know that that can be the difference between a deal that looks like boring to a deal that actually makes sense. That conversation can make a difference. So, as an example, like we've done this several times, and like, something that looks just as an okay deal led to, through a conversation like this, led to a different deal from that same
Yeah.
person that we ended up buying because we had the relationship. And it wasn't even an in-person meeting. It was a 1 hour long phone call that became a friendship. So that's one aspect that you said, from beginning to end, that in-person owner, like sort of that in-person connection is actually something we really try to get to. Once that's established, it's really about, like what I said before. And this is where, some of our training with Sandler and Chris Voss and some of these other, authors, we really hone in on finding ways to try and understand what people actually want, right? And that usually takes, some people say 7 questions. So it just takes, in my mind, it just takes curiosity and genuine interest to help, right? Like I actually believe that. It may sound cliche, but I'm not trying to get a deal when I talk to these people. I'm trying to understand what it is that they actually need. Because when I do that, I learned that sometimes there's really no way we can, if it's just pure
Yeah.
price and there's no room for price, like I just know not to waste my time anymore, right? Because I know there's nothing there. And this has also helped us uncover situations we just need to kind of like step aside and move on, because there's really nothing there that we can add. We've known, and this actually comes from residential, we've known that when it comes down to pure price, it can still go through, but more often than not, it actually doesn't, because someone else shows up with a better price in the middle of the process, and then you don't have a deal.
Yeah.
So that's kind of, in terms of end to end, that's one thing we do at the very beginning. I'll drop in a couple, and we can talk more if you want about other things that we do. But one other thing that we do is once we've established a relationship and we know that we're looking at something real, the sooner the better. But as soon as we can, we set up weekly calls.
Weekly call.
Be 15-minute conversations, 15. And the reason for these calls is that we are driving towards transparency and we are driving towards no surprises. Like we don't want our seller, the owner of the building, being caught off guard by anything we say or anything we do. So we are proactive about keeping them informed at every step of the way on how we're doing things. This is not coming up. I just had one yesterday, and I said, look, these third-party reports are already in the process. By next Thursday, we're going to have the results, et cetera, et cetera. So I actually go into a little bit of detail in 5-7 minutes, and it just gives peace of mind to the seller, to the broker. Obviously, brokers are invited into
Now,
those calls.
so quick question. So that's a weekly calls. It's actually a two-part question. Does the broker typically is included in those calls? Is the broker typically included? And do you do those calls only when you go under PSA, or that's still in the very beginning process of that theory? Can you give me that?
Of course, that's what I meant. We actually, I personally try to do it before, even before PSA, right? Because like it's like cadence that allows us to a little deeper, dig a little bit deeper, and truly understand what we're looking at on both ends, right? It's not always possible, obviously, because some people are like, no, 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 we're not going to do this until we are under PSA. But that cadence, and sometimes pre-PSA, let me be clear, I guess, like pre-PSA may not be like a weekly call on everyone's calendars. Pre-PSA is more of a making sure I'm touching base at least once a week with that person if I know that I'm getting closer,
Mhm.
right? Just like, hey, I saw this, whatever, whichever reason good enough to have a conversation just to see where they are, etc. Especially if we're having a conversation about seller financing and things like that. I just want to make sure they understand because there's usually the point about I want to talk to my accountant, I want to talk to my financial advisor about it. I just not sure, et cetera, right? Once we go to PSA, we actually make it a weekly 15-minute call. But this is just so important in guaranteeing the success of the transaction, right? Because like that makes it a lot easier to make sure any rough spots are smoothed out as soon as possible. Honestly, even negotiations when needed, if the property needs more work than we thought, this makes it a lot easier to I guess smoothen that out.
Yeah.
To your question of a broker, brokers are always invited. They don't always show up, which is actually not a bad thing. Like I personally like having that one-on-one with the seller as often as I can, but obviously we don't want to, make the broker feel like that they're getting pushed out by any means, right? So the broker is always invited, and sometimes they join, sometimes they don't.
That's awesome. Yeah, and it's such a great point you're making actually here. Many investors, including me, occasionally you push the bad news to some the other or future date, right? But if you have this cadence on a weekly basis, you unpack due diligence items that bubble up, and you don't pack it in 45 days later. Just don't serve everything on a plate, right? Because many investors like to do that. You play
That's right.
for 45, 60 days, and then at the very end you serve everything, and then just deal blows up. I think, and I'm assuming, right, every week you kind of dishing out those bad news, and you whether addressing on a spot, or you trading, or the seller is giving you a valid objection why it's not an issue, right? So I guess, can you unpack that? Do you dishing out those due diligence things while you go through those weekly calls, so you play strategically at the end? Or how do you do that?
No, it's I think with so transparency, I wrote transparency because it's one of our things as part of our um what's it called, our proven
Yeah.
process. For folks on EOS, would people know what that is? Of course, you know what that is. So part of our proven process has the word transparency at least twice, right? And we mean that. I actually think that the key here is expectation setting, right? That's how I think about it, and that's how I manage, honestly, and I manage not just seller relationships, but all of my relationships that way, right? Like if people know what to expect and when, because reality is we don't, to your point on negotiations when things are not the way they're supposed to be or whatever, those things sometimes take time to find out, right? Like the property condition assessment may take a while, roofing inspection may take a while. So those surprises may come at a later date, whether it's 2 weeks later or 4 weeks later, or whatever. But as long as they know, hey, look, I have a roofer coming in 2 weeks, or I have the property condition assessment. I won't have it until 2 weeks from now. And by the way, what we may find out, we already know about this and this and this that you told us. So hopefully we don't find anything else. But if we find anything else, we will let you know, and we'll have to have a conversation. We even go that deep, right? Like to create the expectation that if anything else other than what we already saw with our eyes or what he or she told us comes up, we're going to have a conversation. So then it's a lot easier when the results actually come back to say, remember I told you that if anything else came up, we had to talk? Well, we have to talk, right? So so then they're not like, oh, where is this coming from? This guy is coming at the last minute. It's just expectation
Mhm.
setting. Expectation.
That's amazing.
Um, yeah, one little thing we do from the beginning, again, in terms of expectations, and this is very little, but now after having done it a good number of times, we actually know it's not very little. We say at the beginning of the process, we say, look, we like celebrating, and we would love to celebrate with you at the end of this. Once we close at your favorite restaurant that you choose, one of us, either me or my business partner, will fly out and have a dinner with them.
Mm.
And we do it and it seems just like a small thing, but it's like people value that stuff, and like especially, yeah, honestly, and we do it even whether the person has other buildings to sell or not, because you never know, right? You never know. It's really about developing those relationships. Some of those relationships, obviously a smaller portion, have become mentorship relationships. We're talking about, there's a lot of sellers in their 70s and 80s. There's just a wealth of knowledge to learn from those folks. So we kind of playing that long game, the long-term people, long-term relationships, and those dinners really set things up for the future to become friendships, mentorships, and it's happened, in multiple occasions where we are now. I might have told you at some point, and we can talk about it if you want. But we get invited to some of these people's homes. They fly us out, and they become friends and mentors, and in some cases have resulted in us buying other assets from them because they trust us. They like working with us. They like the transparency, and they just we are kind of like the easy button for those people.
That's awesome. So let's dig a little deeper into that. Most investors hunting for next deal, and time is a very scarce commodity. And how you seem to play a longer game. How do you balance between immediate wins and playing longer game? And what I mean by that is sometimes you can get bogged down, right? Just nurturing so many relationships that probably going nowhere. And you may be thinking that you're losing on some opportunities, that you may try to make a quick deal with this seller or whatnot, or move on to another one. So, are there any mental models that you have just to kind of keep pushing for the long game instead of just going to short wins, quick wins?
Well, I think it's a mindset shift that happened when we've migrated from residential to commercial. To be honest, I could be wrong about this, but my view of the world in residential is really like a big universe, right? Big blue sky, big universe. Chances that you will be interacting with the same folks is slim to none, right? Because we're talking about residential homes, etc. We quickly realized that commercial is not like that at all. It's actually a much smaller, universe than anyone thinks. Especially if you start focusing in fewer markets, which is where we're doing. At the beginning, we were kind of like all over the place in the Midwest and the East Coast, and we're starting to narrow down our markets, and we're realizing that it's actually a fairly small, a fairly small world where all the key players know each other or know of each other. And so there was no way in which we could not play a long-term game. So for us, it's almost like there's no other way to play it. I've seen at least twice or three times people that don't do that, and immediately they get, they get the how do they say? They get, I guess they get scratched from the list, or they get the red flag. Is like, don't talk to that guy. Even with sellers that I've interacted with that know other people in our network, it's like, oh, you know, like, oh yeah, yeah, I would never would deal with that guy. So it's actually much smaller world. And by the way, this is one of the reasons we love commercial so much, because it's like we can play a long game. It's a marathon, not a sprint. We can play to our reputation and our word and like be ourselves. And just because of that, we will be rewarded. We are already getting rewarded. I can't even imagine 10 years from now. It's like because the market rewards you from following up and following through. The market really rewards you. It's what we're already seeing. And again, we've only been doing it for a few years. I can't even imagine how this is going to look like in 10, 15 years when people know us more in the key markets where we're focused. So I guess the short answer to your question is I just don't see any other way to do it. It's a market small enough. It's a relationship driven market, whereas any other way to do it, it's going to eventually backfire.
Yeah. Amazing, amazing. Thank you for sharing. Yeah, it's a great takeaway for sure. There's just not that many players in this market, and you have to be very careful. That's the only thing what we have is the reputation, right? If your reputation's gone in commercial real estate, that's it. You got to change the industry. You're not going to come back. So
That's right.
that's a
And
great thing.
as an aside, we're also learning is really no different with the talent, right? With the people that we hire. Obviously, we're talking about a much bigger pool, but still, you know, within the niches where we hire, as you know, we have some of our team in Colombia. Within the niches that we hire, we are becoming known, and people are starting to say, "I actually want to be with good." Our great people are starting to be poached by other U.S. operators that want to sort of like bring great talent. They're starting to use us as the place to poach, which is unfortunate. But anyway, it just that my point being, it just applies to everything.
Exactly.
I think any businesses like this, but definitely this business, our business, is so heavy in relationships.
Yeah, 100%. One thing I think I missed asking in the beginning of a few questions we started going in your tactics. I would just like to know, for example, when you go in with the meeting with the seller first time, whether the phone call or the meeting, do you have a format? How do you open up that conversation, and do you have a structure of any structures of the certain meeting or the certain phone call? Do you run something by before the meeting, or you just free flow? How does your phone
No,
call sort of structure goes?
definitely not free flowing. And again, it goes back to our residential days as well, because like we used to have a very specific sort of template that we would follow. If you're familiar with Sandler,
Oh yeah,
that the upfront contract is something we use a lot in the residential world, where basically upfront contract, for folks that don't know what that is basically where you're laying out in a very succinct way, in 3 minutes, you're laying out to the person in front of you how the conversation is going to unfold, right? And what we're going to cover during the conversation, and where their conversation may end up, if it goes in this direction or if it goes in this direction. So it goes back to expectation setting, right? Like you're basically letting people know in the first 3 to 5 minutes of the conversation what you anticipate happening during the conversation, and you're giving them an out if things go this way or that way, so they don't feel obligated or they don't feel stressed about this guy's trying to sell to me, this guy's trying to like take advantage of me. None of that. It's clear, this is what we're here for, these are the things we're going to cover during the conversation, and these are the potential results. One way or the other, we look forward to developing our relationship with you, whatever. Like this, so yeah, I'm kind of like summarizing how it goes, but in a way, so we did that so many times in residential that then it became second nature to do something similar in commercial, right? Where we kind of so to your question, it's a quick introduction of who we are, a quick introduction of what this will look like, what we have to offer. The key point about we really want to learn about what he or she, that person, is looking for, and we emphasize that one in a big way. And then whether or not we find a place to meet where we can add value to you, then this will happen. If not, then this other thing will happen, and we'll be either way, we're part as friends and everything will be great. So it's like in 3 to 5 minutes, you give them the whole visibility, and it's so effective
yeah,
that it sometimes just kills the conversation in 10 minutes, and that's fine. Because then it's like, oh no, 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 I'm looking for a five cap here. I'm exaggerating, but actually, in my area, that's not crazy. Like there are people looking for five caps all the time because it's Fairfield County, Connecticut. So, and then it's easy. Then it's like, all right, I didn't waste your time. You didn't waste mine, and like we'll move on, and like let's keep each other's contact information and move on. you know?
Yeah.
So, but yeah, definitely not, we're not flying over the seat of our pants, so to speak. We've come a long way in like understanding how to make those conversations fruitful and impactful and effective in a very short period of time. And then we dive into the meat of the conversation. And again, the meat of the conversation usually revolves around questions, 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 understanding what really is underneath the need to sell or the will or the wanting to sell, getting underneath the details of that as much as possible until we find a reason or not, and then we take it from there.
Yeah. Yeah, it's similar to my process. I think also coming from residential world, normally if it's a first almost contact, it's usually I'm setting the stage, what we're gonna do in this conversation, just 2 minute, like 20 seconds commercial, know what I'm doing, what we buying, and I'm always diffusing the tension that obviously we don't buy every single property. I'm pretty sure we have other buyers, and I'm giving the outcome that no, and this is gonna maybe take 20, 30 minutes, and at the end we'll decide if we want to take another step. And then yeah, through the questions. I think I learned it from the book Spin Selling. You probably read that one too, right? Spin Selling. Yeah,
Yeah.
it's been a while. I need to read it, but yeah, that's great, amazing. Thanks for sharing. All right, so let's keep going through maybe a little bit more questions about seller financing. So many people they have a big misconception about seller financing. In your opinion, what main questions or main topics we as investors should open up with the sellers? Because many buyers, many operators don't know how to open up the conversation, and there's a lot of misconceptions. How do you open up, and what frame are you going with the seller when you open up the seller financing conversations?
Yeah. So this question is the key question I open up with. It usually takes obviously having warm up the conversation a bit with everything I said before, but at this point, I basically make sure the person is going to receive it well. But I say something like, if you don't mind me asking, what are you planning on doing with the capital that you're going to receive from this sale? So, and that opens up all kinds of things, right? It opens up with like in a lot of cases, actually, they're not sure. In some cases, they know exactly they want to 1031 it into a different investment. But depending on their answer, right, that opens up the possibility for me to talk about seller financing. And there's obviously levels of sophistication in terms of sellers. Sellers that we actually just recently put something on the contract with the seller that these are the only buildings he owns because this is where he operated his business for 2 or 3 decades, actually almost 3 decades. So he's not as familiar with it, right? So he's like, oh, uh, so what do you mean? So like, yeah, I mean, do you realize that if we go through this, you're gonna have a big tax burden in this year as this goes through? He's like, oh, I hadn't thought about that, and like, so it just opens up I mean, let me back up and say something else. Seller financing is such an amazing tool in our arsenal, I guess, as commercial real estate investors, because it's really one of those easy win-wins. Given the right conditions, it's just such an easy win-win that allows for that value add opportunity that I was talking about earlier, right? And you obviously know this very well, Saul. So like it's you make them realize that you're actually helping them, and then when they go verify with their financial advisor or when their CPA is like, oh, you were right, and like this makes a lot of sense. I'd much rather do this and spread the gain over 5 years as opposed to like take it all right now, right? So, but back to the beginning, it starts that way. What are you planning on doing with the capital? If they, unless they have a very specific plan, which happens, I would say, 20% of the time in my experience, unless they have a very specific plan, then I go into would you consider, depending on how sophisticated they are, sometimes you don't have to say anything, they already know where you're going. Sometimes you have to go through and explain what you mean by them carrying a note, and how would that work, and et cetera, et cetera.
Makes sense. Makes sense. Now, on that note, on the seller financing offer, do you go right over the bat? Do you offer two offers, or do you use seller financing option while you're going through due diligence when you're uncovering some issues and you kind of mitigating that with the seller financing? Do you have a certain strategy? I can share mine. Typically, I go with a cash offer. And then within negotiation, typically pivot to cash offer and seller finance offer, pick one. That's my typical strategy. And during due diligence, I increased the seller financing offer modified based on what findings we have. That's kind of, typically where I'm falling. I'm just curious where you're at with this.
Very similar. We used to lead with both, and we learned that that was not very effective. So we usually bring it up. I wouldn't say late in the process, but later in the process, uh, even if we know that it's relevant after having this type of conversation. Right? Like, we don't want to fall flat and just put a seller financing offer in front of someone who already has a 1031 lined up, because like that actually, believe it or not, that in my mind that actually takes points away from the relationship, because like you're falling flat, right? It's like dating. It's the same thing. So if we see that opening is when we bring it up, because then it's part of that conversation of how do we find more ways to add value to you, right? And that's obviously, it's a huge, when that happens, it's a huge. This one I just told you, it just happened. It was very eye opening. Very, like, we literally not only got the seller financing, which is obviously a great thing for us, but like, we gained this person's trust, because this is something no one had said to him, even his broker.
Amazing.
Right.
Yeah.
Because his broker was looking to get him to do a 1031 into another asset that the broker was selling.
Yeah.
Right. So we immediately gained trust just by bringing this up and explaining to him.
That's awesome. That's amazing. Yeah, there's so many things we can talk about seller financing. Idea just popped up. I think I need to schedule maybe another podcast with you and maybe with a few other folks that I know, and we'll just brainstorm about the structures of the seller finance. I have a gazillion of questions I would like to ask, whether you're doing a MESDAT or doing putting him as an LP and pref and stuff like that. But there's so many avenues to go. I think I will definitely schedule one more with you and maybe a few other people that I know. Maybe we'll do like 3 or 4 of us. We'll just kind of spitfire and brainstorm the structures that we do. That's amazing.
I love that. Let me add one more thing in there, which I believe we and I have spoken about this, but this has become more relevant for us. I know you've done it in the past a lot. The substitution of
Yep,
collateral is such a beautiful thing. Right? It's such a
that's one of
beautiful thing.
them.
So
That's one of
yeah, so
them.
we that maybe that in that future conversation we can talk about that
Yeah,
too, because
yeah, for sure.
it's such an amazing way to make it happen. Yeah.
So, look, I would like to lead with actually, I'm gonna have two more. So this one's gonna be about seller financing still, and we about relationship with the sellers. So we've done multiple deals with the sellers, obviously. So how do you maintain those relations between transaction and after it's closed? What is the process after you stay in touch? Obviously, you've done more than one deal, right? How does it look like?
It's I want to say it's a C it's C, we obviously have a CRM for our leads, right? For our pipeline of people that we're working. Once we get to the stage, we're obviously not talking hundreds and hundreds of people, right? We're talking, key people that I stay in touch with like that are probably about a dozen, and it keeps growing, obviously. But like, the point being, I do think of these people as some of them are mentors, some of them are friends, some of them are potential investors, actually. So the people that we've bought buildings from that are at this level of friendship mentorship are not that many. So it really becomes a friendship thing, where, like, of course I do have a tally and I do have a way to keep making sure that I'm reaching out every so often, and I keep these people in mind, right? So that one is less of a, I would say, less of a science, more of an art. It's more about just like, I genuinely care about these people. They become friends. When I have a question about something that they know, something that I know they know a lot about. Like, I'll tell you about one seller in particular. He built 36 industrial buildings in his lifetime after building thousands of homes before that. So when it comes to construction, obviously that's a guy I would call, right? When I have a tricky question about
Yeah.
something in building like the ones he built. So I just always use it as an excuse, because even though I may already have a partial answer on the question, he always adds more to that. So same thing, like one seller we bought a building from has a massive import business from China, right? So every time I meet someone who I know is looking to import or looking to find better contacts, looking for better pricing on the containers, whatever, I make the connection, right? So like, it just, at that point, it just becomes like, how do I continue? Maybe that's the best way to summarize it. How do I continue to add value to them, even after the fact. And then it just becomes also a personal thing where we end up meeting their families, they end up meeting mine, et cetera, et cetera.
That's awesome. All right, so I'll leave you with this question: What three books would you take as a good sign if potential partner had read them?
I see. What 3 books would I want my sellers to have
Yeah,
read?
let's say if you hear that the seller read those 3 books, or your potential partner read those 3 books, that is a sign for you that this is going to be a fruitful partnership and it's going to be long term.
Okay, that sounds good. Let's see. This one is it's gonna sound strange. There's a book called The Untethered Soul.
Okay,
Have you,
I read that
been
one.
familiar with that
Amazing
one?
book.
Yeah, that's an amazing book. So if someone has read that book and have actually taken the time to understand it, I highly that my respect for that person grows significantly. That's one. Business wise, and again, this does not necessarily apply as much to a seller, but it could. Traction, of
Traction.
course.
Yep.
You know, that book is such a fundamental thing in our lives, and anyone who runs in the US. And then again, not so much for the seller. I'm trying to think for the seller in particular, but like for any people, any person in general, for a potential partner, who not how. It's
How?
just and I value so much people that think that way. I value them so
Dan
much, right? Because it's
Sullivan.
like they're trying to get things done, not necessarily by figuring out how, but who do I need to get this done? So those 3. If I had to think, I gave you 3 already, but if I had to think about a seller, I think it would always go down to like, especially since we're talking to people that are in their 70s, 80s, 60s sometimes. It's really about books that would the, does this people have the right does this person have the right values? That's why I went to The Untethered Soul and
That's
and stuff
awesome.
like that. So I think I'll leave it with those 3.
That's great. That's amazing. Thank you very much, Jaime. I really appreciate for this. If people wants to find you, if they want to invest in your deals, how do they find you?
So easy, Jaime at goodharborcre.com. That's my email. So feel free to reach out. I'm happy to do so. We do have a good set of investors now, repeat investors, and we're always taking new people if they want to invest with us. Trust is so that we're all about, basically.
Amazing.
You've been listening to the Value Builder podcast. For more strategies, stories, and episodes, head to valuebuilder.co or subscribe on your favorite app. Always make it better than you found it and keep adding value. See you in the next one.